Wednesday, July 12th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's just gone past 8 a.m. London. This is an early market update, but I'd also like to point out that it looks like the third leg of the stool for the US dollar is basically been ripped from underneath it. And by that I mean the Japanese yen. If you didn't know, the dollar index, basically the weighting of the dollar index is 57.6% euro, 13.6% Japanese yen, 11.9% pound sterling, 9.1% Canadian dollar, 4.2% Swedish krona, and 3.6% Swiss franc. And the reason why the euro has such a huge weighting, big weighting, 57.6%, is because it's an amalgamation of the old national European currencies, the Deutsche Mark, the French franc, the Italian lira, and probably the Dutch guilder. So that's why it's 57.6%. But yeah, so what do I mean by the stool? The third leg of the stool has been ripped from underneath it. Well, lately we've noticed that the dollar has been quite weak. The dollar index as a whole has been going down, but the Japanese yen has been going down, i.e. the dollar has been going up against the Japanese yen, and the Japanese yen is the second biggest component of the dollar index. So that's kind of cushioned the fall of the dollar. And if you've listened to some of my older videos, and I'll put them up on the eye above here on the screen, I've spoken about how the Japanese yen is a very important currency in terms of speculation and investor flow, because it's a carry trade currency. And what that means is that the Japanese yens for almost decades has been kept down and debased by the Japanese authorities. Interest rates there have been kept at 0 or negative. And it is a very, very liquid market. And it's a market that is, how can I say, convertible into foreign currencies. People, from Europe, from the United States, from Canada, Australia, can operate in the Japanese markets and have access to Japanese yen. So what they do, speculators and investors in other countries, major Western countries, they borrow in yen and use those proceeds to invest in all kinds of assets in their currencies or in other currencies. And why do they do that? Well, because it's a fairly good calculated bet that the yen's going to remain weak, and it's not even a bet that you can borrow for nothing in Japanese yen. So if you can do that, for example, to borrow yen, you have to sell the yen against, the dollar, for example. So you sell the yen, you borrow, and you do it for nothing, and you get dollars, and you can get a return of 2% or even 3% in 10 and 30-year treasuries, or you can buy stocks in US dollars. And if the yen remains fairly weak, you make money on the rise in asset you bought, be it government bonds, US government bonds, stocks, or corporate bonds, whatever. And then when you close the trade or the investment, you buy back the yen, usually for a price that isn't that much higher, and you haven't paid anything for it. So that's called the yen carry trade, and it helps. It's helped, aside from all the QE from central banks, it's helped the Western financial markets stay, how can I say, inflated for these last years or so. So the flip side of the coin is when the Japanese yen starts strengthening or the dollar starts dropping. Then there's a problem, because if you borrowed in a currency and that currency starts appreciating, even appreciating faster than your asset is going up, you're going to start losing money, even if your speculation is doing well. But if the yen does better than that, you're screwed. So what do you need to do? You need to buy back the yen. And what does that cause? That causes an even stronger yen. And then you have to get out of your investment. So it's quite important in terms of risk and volatility, the value of the yen. So, and that usually, when the yen is weak and asset markets are doing well, gold and silver don't do very well. So that's why it's very important to keep an eye on that cross rate, dollar yen. And in the last few years, gold and the dollar yen have been very, very closely related. And by that I mean, when the dollar goes up against the yen, gold tends to go down. When the dollar tops against the yen, gold tends to bottom. It's not perfect like the same day, but it's very close. And I will show you now why that happens. So let's have a look here at the dollar yen. And what I mean by dollar yen, it's it's the exchange rate, dollar yen. So what $1 buys, how many yen it buys. So this chart is the dollar versus the yen. So if the chart goes up, that means the dollar is going up. The chart comes down, it means the dollar is going down and the yen's going up. It's a bit complicated, but that's how foreign exchange works. So I'd like to go back here. I've got some notes. You see this chart here? There was a low in the dollar on the 11th of April, and that was at 108.13. And then from then on, the dollar rose against the yen to a high of 114.37 on the 11th of May. And then from the 11th of May to the 11th of June, the dollar dropped from 114.37 to a low of 118.82. So that was 11th of June. And since then, for the last month or so, the dollar, even though the dollar index has been dropping, the dollar's been rising against the yen. And as you can see here, on the 11th of July, we made a high in the dollar of 114.50. That's compared to the high in May of 114.37. It looks to me like a double top. I know the high was slightly higher, 114.50 compared to 114.37, but that's fairly insignificant when you're looking at technical formations. That is a very good double top there. And now, since the 11th of July, well, which was yesterday, the dollar has turned around and dropped even below this trend line that we've seen since the 11th of June. So I personally think that the dollar's put a top against the yen, and that confirms the bottom that I called. Well, I asked whether gold and silver made a bottom. I think now I can say that we've definitely made a bottom in precious metals. It was a few days earlier than the dollar versus the yen, but to me this looks like a pretty good signal, unless we go back above 114.50 and we negate this move down here through this trend line. It looks pretty good to me right now. So let's have a look at gold and compare those dates. So I said that on the 11th of April, dollar made a low against the yen at 108.13. In gold, the high in gold was on the 17th of April. So almost a week later, and that high was 1295.59, you can see there. And then we made a low in the dollar against the yen on the 11th of sorry, we made a high in the dollar on the 11th of May, and gold made a low, let's see, on the 9th of May. So a couple of days before at 1214.46. And then from the 9th of May to the 6th of June, gold rallied from 1214.40 all the way to 1296 on the 6th of June. And yeah, and the dollar made a low on the 14th of June. So that was also about a week later. The dollar made a low against the yen at 108.82. And since then, since the 14th of June for the dollar, and since the 6th of June for gold, you know, we've been on a downward trend for gold and on an upward trend for the dollar yen. And as you can see, the low in gold now was 10th of July, 1205, even though the high for the dollar yen was on the 11th. Yeah, the trend line is different for gold than the one in the dollar yen, but fairly similar. I guess we need to get back above 1225 in the next few days for gold, and then we'll break out from that line. But it looks to me, right now we've got like a 1 month cycle. We had a month leg down from the basically mid-April to mid-May in gold, and then from mid-May, beginning of May to beginning of June, we had a 1 month up, and now we've had a 1 month down. It looks like we're going to go back up in gold. Where it will go, I don't know. It would be good to see it break through that double top at 1295, but that's another question. But directionally, gold looks like it's bottomed, and the dollar yen has confirmed that. Silver, the relationship isn't as close. Silver trades as well as an industrial commodity, but looking at this chart here, I know it was an annoying flash crash on, you know, when was that? 7th of July. But at least we can certainly say that silver's put a bottom here. Right? And I think the level now to look at is 1615, which was the high on that day of the silver flash crash. If we can get back above that, that would be good. And now we're going to have a look at the dollar index. So the dollar index actually made a low on the 30th of June. So it the low in the dollar was you know, different from the dates we've been talking here, mainly because the yen is kind of helped the dollar index. So the dollar index rose from a low of 95.53 on the 30th, sorry, 95.47 on the 30th of June, and it made a high of 96.51 there on the 5th of July. So, and gold continued to go lower from the 5th of July. Took you know, it went lower for another 5 days. You would have thought, you know, the dollar, with the dollar making a top, gold should have gone up, but the yen stayed strong, and that's why gold kept going down. But now it looks like we're gonna test that 30th of June low of 95.47. The low so far today has been 95.53, so very close. And you can, as you notice the dollar index chart, something I just noticed, you see the legs are getting smaller as the market goes down. You know, the drops are not getting too much smaller, but the rallies are getting less and less stronger. You can see the last rally from 30th of June to the 5th of July has been quite, insignificant compared to the previous counter trend rallies we've had since the beginning of the year. So to me, that chart does not look very good for the dollar index. So where are we this morning in terms of the markets? Let's have a look. Gold right now is $12.19, so up $1.50. So we're back above that $12.14 level. That was a midpoint of a double top that we needed to get back above, so that's positive. The high so far is $12.20.80 overnight. $12.20 is also a key level. It was some kind of support on the way down. Silver got up to $15.98 overnight. Right now it's kind of come off a little bit. It's at $15.84, down just a cent and a half, sorry. What else? Dollar yen, that's the one we need to keep an eye on. Right now, the dollar yen is at 113.40, so down 0.5%, and the low's been 113.31. So we're right near the lows here in the dollar yen. The euro is down slightly, but only about 6.05%. So that's what's maybe helping a little bit the dollar index right now. The pound is weaker, like a 0.2%. But yeah, the yen definitely looks like it's strengthening against the dollar, or the dollar is dropping against the the yen, dollar yen. And let's have a look at what the dollar index is doing right now. That 95.47 level is the key here. Got a delayed quote right now. It's I've got 95.57 dollar yen. And the low so far has been 95.53. I guess the euro now is kind of helping the dollar index a little bit. We were up at 114.90. We're near the lows for the euro here, but the yen is the cross rate to look at if you want to, see the direction for precious metals. So that's it for now. If you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. And you can follow me on steemit.com as well. And I'd like to thank all the people who have donated to my channel. I've got donation links below as well in the description. Take care. Bye.